Today, fellow investors, let's answer a bit of your comments on specific stocks. We have StoneCo, we have crash, bubble, the likelihood of it happening or not. We have predictability of Canada Bell cutting the dividend, Bayer, and let's immediately start. So StoneCo, that was a company that we analyzed more than a year ago, I think, and now it's a P ratio of 8. It's very, very cheap, especially if you look at the stock price. Warren Buffett did buy at some point in time, and then he checks it out, and then if he doesn't like what he sees, he usually sells it. And now you think this is very cheap. If you look at the business is still growing 8%, 40%, 40%, all great numbers there. And if those numbers keep growing, this might revert to previous levels. And what is that? That is a 10x, right? However, there is also the risk there, and Morgan Stanley discussed how this might be the peak year on their finances. But after that, competition increasing, there would be a compression of 50% of margins due to bigger competition, and then that the stock is already pricing that in, then you'll see a P ratio of 15, 20 as that reverts, and then you understand also the market cap. Now, for me, it's extremely hard to know how will the payment processing sector in Brazil continue developing over the next 3, 4, 5 years. Likely even Warren Buffett didn't see it. So these businesses, you analyze, you check. If you know, if you can follow, then you put it on the covered stock list. If not, you just put it on a too hard pile, and that's it. And great question. Yes, the stock looks very tempting now, but I think I have to put it on the too hard pile. And there is a risk reward. If they keep on growing, the stock will double, go to 20 easily, as it was the case beginning year. So you can make it 2x, you can play around. Very interesting, but for me, just a too hard pile. Then there was another comment here on crashes where we discussed the nightmare scenario. Big problem is these bubbles can go on for years, even a decade. We've seen this happen before, then only crash hard. And then the market, yes, it's very expensive. And then inflation, the stocks go up from a nominal perspective, which is correct. Great comment there. Sven has been predicting a crash right around the corner since I bought the Blue Blazer back in 1972. However, here I want to discuss, thank you, how I'm not predicting a crash. Nobody can predict a crash. But if you look at the fundamentals, if you look at the valuation, there might be a crash, there might not be a crash, but the returns will likely be around 0 or lower or close to that, not high. A crash can happen tomorrow, a crash can happen in the next 10 years. There will be a crash, there will be stock market crashes, that's in the nature of humans. When? Impossible to predict. But it's good to understand the risks, and that's why we look at scenarios. And yes, if you look at scenarios and you put the word crash in title on YouTube, you get a lot of views, which then is something natural for a YouTube channel. But keep in mind, I'm just sharing what can happen, and you can see if you are okay if that happens, sooner or later it will happen. Impossible to predict, but it's good to know the risks. And yes, stocks can continue going up for the next 10 years on inflation, on money printing, or whatever. That's also something that can happen. Anything can happen. We cannot predict the future. My crystal ball broke a few years ago, but we have to see how are we positioned for whatever. That's the goal of this channel. And then we do specific videos, this, that, and then we put the pieces of the puzzle together. And then again, also, Warren Buffett bought Kraft Heinz value investment 12 years. It's still where it was, and value investor never works because I said that Dollar General is cheaper. Value investing is the following. 4 out of 10, right? You're an okay investor. 5 out of 10, you are a really good investor. 6 out of 10, you are GOAT level investing. But there is something else with value investing. The stock didn't go anywhere. These are the dividends paid out. 2 billion, 4 billion, 4 billion, 4 billion. Warren Buffett invested this cash into what? A stock named Apple. It was a fruit company, no. And yes, the S&P 500 did well, but you can never predict the market, and that's exactly what happened here. Let's say that the S&P 500 remained flat. Warren Buffett would have compounded that earnings, those dividends, regained the money he invested, and kept on compounding. That's value investing, and that's why it always works. Another comment, would I analyze Costco? I checked the stock, what the heck is going on there? If you look at Costco, 55 P ratio, this is something one could also think about shorting. Revenues, yes, are growing, everything great, but net income of 7 billion, market cap of 400 billion, this is already in the wacko valuation. Absolutely great business, nothing wrong with it. Even growing, e-commerce sell, everything looks good. But at some point, the good might be extremely overpriced. I don't know what's going on there. I think it's crazy. And I hope it ends up well for investors. Costco is a great business, and likely the fundamentals might catch up with the valuation, but at these prices, have fun. Another question here on my BCE stock analysis. Have they ever cut the dividend before? No. Stocks are manipulated because I said it is a little bit risky there. Lots of guessing in this video. Maybe a 6-year-old could say this. It might snow tomorrow. And that's exactly investing. I don't know the future. I create scenarios and I look for investments where, okay, whatever happens, I'm good. That's the essence of value investing. And then people ask for me to look at businesses. I'm happy to look at businesses because that's my job. I have to find those where whatever happens, I'm good. Somewhere I'm looking for uncertainty. Will I make 2x or 4x? Or will I make, 0% or 2x? And then I say, I can wait for 0%, maybe with a dividend. But if there is risk, then I simply say no. And that is value investing. If you want someone that can predict the future, I think there are plenty of other YouTube channels here. Good question here. What do you think of Bayer? They're at 20-year low now. Yearly free cash flow 5 to 7 euros in the next few years, and 15 of the last 22 lawsuits were won. Okay, that's 2/3, but they still lost 7, no? Anyway, a lot of questions when we also discussed Volkswagen. It trades massively below fair value and some hedge funds seem to be piling. Harris Associates, Bayer. What do you think about Bayer? Same problems, better buy. I think we discussed it 8 months ago. Now it is again significantly lower, 30%, and the story there has been a very ugly story over the last years, and the market cap is now 20 billion euro. When Bayer was great, then they purchased Monsanto for 66 billion euros. Can you imagine that the whole company with Monsanto is now at a third of what they paid for Monsanto? But then, if you look at the numbers, free cash flow, I see here currently stable but likely to improve. Earnings per share are there, that's a P ratio of 5. But then there is also an itsy-bitsy issue here of litigation, glyphosates, Washington Supreme Court to review the cases. They are still selling those glyphosates, but their volumes normalized. So you never know how will this end. And yes, if you look at the numbers, free cash flow, 2 to 3 billion, that's 10 to 15% free cash flow yield. They will use that to lower the debt. You can see they are lowering the debt. Over 10 years, 5 years, maybe if they lower for a few years the debt and the rest of the company grows, that could save them. And if there are improvements, this can easily be a 2x, 3x. But most recent news, dropped 7% after US court says it will review Monsanto case. So there is more and more litigation coming. And again, just too hard pile. Yes, hedge funds are made for betting on some things, watching their risks and making crazy bets, trying to have diversified then market returns. Your portfolio should be, if you're watching this, more about compounding long term no matter what, again. And that's the core of what we do on this channel. And that's why many of these cases are simply too hard pile. We can discuss them in a comment section like this, but that's it. Keep watching for more value investing ahead.